as I mentioned, jumping from 44 points in the fourth quarter of last year to 55 in the first quarter of 2011. It seems that confidence is returning. Is that the signal we're getting?
Well, certainly if you look over the past few quarters, you've had the confidence index actually in an uptrend. So obviously it can be volatile within that uptrend, but certainly the first quarter reading was a very sharp jump, and then also much more broadly based than it had been to date. So for example, you're seeing wholesale confidence as well as manufacturing confidence also joining the party.
Let's zoom into the manufacturing side of things, because we also, when you look at the PMI numbers coming through well above that 50 level, ticking up slowly, and it's also interesting. I mean, we've got to keep in mind that that 50 level is neutral. We're now sitting at 55 points when it comes to this specific index. We were in contraction in the fourth quarter of last year, so a nice turnaround there.
Yes, certainly. I mean, what was surprising is that you had this divergence between the PMI and the Manufacturing Business Confidence Index. In terms of the underlying detail, it seems to be a case of domestic orders picking up, as well as some improvement in terms of export orders as well. And then importantly, in terms of manufacturing, is that you're starting to see some improvement in hours worked, as well as an improvement in fixed investment intention. So certainly things seem to be better, and this is all happening in the face of a strong rand.
Let's touch on the retail sector. Confidence retracting slightly, but still well above that 50 level. We're sitting at 58 points.
Yes, the absolute level is still very, very high. What has been a surprise in this cycle relative to the past was that your retail confidence never declined very sharply. What is maybe dampening the level somewhat is that you're seeing some moderation in growth in your semi-durable goods, so clothing, etc. But on the whole, it seems that there is a spillover into broadening categories like your non-durables and your durables as well. So improvement there in terms of, again, sales volumes, which are actually positively surprising. You can actually see that in terms of the retailers' results that are coming through.
Okay, well, let's just perhaps look forward as well to see some of the big issues. We've got higher fuel prices. We've got rising inflation globally. That's still yet to feed through into South Africa. We could have a weakening currency. We're still pretty much on the front foot as well. Carmen, what are you reading in terms of confidence in South Africa going forward?
Well, certainly the confidence in terms of growth is improving. The question is whether the high inflation actually derails that growth. Now, our base case is that you should see improving incomes as the employment picture recovers, but at the same time there will be some squeeze around high inflation, which you did highlight. And the worry there is that what you're seeing in the detail is that pricing power seems to be returning. So alongside this idea of exogenous shocks, companies are starting to pass on higher labor input costs, as well as now higher commodity price input costs. And that makes it, I wouldn't say very fragile, but the risk is that you
have to pass it on to the consumer, essentially.
Or you must absorb it into your margins.
Yes,
so
exactly.
Either it's a bad news story for the stock markets, or it's a bad news story for inflation, therefore interest rates. So our view is it's probably going to be a combination of both, but the point is high inflation is on the cards, and the question is just whether the Reserve Bank reacts earlier or whether they'll delay tightening because of issues around uncertainty of growth, employment, the strong rand, which so far, doesn't give them much scope to hike aggressively.
Okay, the building sector and the subsector within this index remains pretty subdued, in fact very subdued, and no real signs of recovery. Is this as low as it's going to get? Do you think we could see a recovery going forward? You look very reticent to agree to optimism there.
It is the lagging sector, okay, but the problem is that it's been very depressed, and the lag has felt very long. Also, if you look at the underlying information in terms of the survey, there's pretty much nothing happening there. So across the board, whether it's residential, non-residential, vacancy rates are still elevated. Until you see vacancy rates come down meaningfully, it's hard to see investment pick up significantly, other than, for example, the government's infrastructure program. That we know is more a long-term story.
I mean, just to give you a sense to the viewers out there, the confidence edged lower to 18 points from 20 points, and that is the lowest level we've seen in more than a decade.
Yes, so certainly you would expect with the lag, the low interest rate environment and better demand to start filtering through, but it's hard to see the excess supply situation, which seems to be in the housing market, to unwind quickly. House price growth has moderated yet again. There's still excess probably supply in terms of retail space, etc. So we do think this is going to lag the recovery for a while longer, and it will be a very gradual pickup.
Let's touch on the rand quickly. We're sitting at 689, 690 to the US dollar. Interesting movements coming through on the currency front as well, on the oil market. Of course, those peripheral topics that we've been seeing OPEC is meeting to discuss plus increasing supply. Tell us about how this is going to affect the local currency.
Well, in terms of the local currency, what we have been surprised by is how quickly it has pulled back to below 7 again versus the dollar. So certainly the dollar story seems to be the dominant factor there in terms of dollar weakness. The point is strong commodity prices are usually very favorable for the rand, but if what might be happening is with the very high oil price, you're actually moving into slightly more negative terms of trade environment, and that ultimately wouldn't help for the currency. But in the medium term, we think the environment is still favorable because growth is holding up quite well globally.